What is up, everyone, and welcome to another Bitcoin market update. In these videos, you will learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin and others. So let's dive into it here with Bitcoin on the monthly time frame. But before we do, just wanted to keep in mind that everything on this channel is for educational purposes only and is not intended as financial advice. All right, let's dive into it here with Bitcoin on the monthly time frame, folks. So you can see that we've set our higher low here as we've come down off the drawdown that we had in April. Once we set that higher low, we have risen already over 73% since the bottom. We have increasing bull volume, at least for the moment, with where the candle would close now. It would be bullish. If we close below the open of the candle, which is down at 41,515 on this exchange, we would experience, this would be a red volume candle instead. So this monthly candle closes in 7 days. So that's why we're talking about it, because it's getting close to closing. And how this candle looks when it closes matters a lot. So if this candle looks the way that it looks now, it's pretty good for continuation, and we'll likely see some continuation in the next month following that. If this candle closes and we see a longer upper wick of profit taking, we will likely not see very much follow through the following month. So that's what I'm watching for. I'm really just looking for the candlestick in the monthly time frame. So let's go to the weekly time frame. Now, something I wanted to point out that is on this exchange that we're looking at, I've talked about the volume a lot here on this rise, and you can see that we did have some increasing volume here last week. But this is what I did some extra digging yesterday, and I found that this is actually only the case on this exchange. The other major exchanges like Coinbase, Binance, and others, they have declining bull volume on this whole rise in price. And what I've been talking about is when you see declining bull volume, and you've already risen this many weeks in a row, 5 weeks in a row, 6 if you count this upper wick of this week, we're due for a high to be set on the weekly time frame. So that means that on the lower time frames, we're going to be trading down. So if we're keeping that in mind, it doesn't necessarily mean this week is going to be the week where we do that, but it is starting to look like this might be the week where we do that. So we'll see as the week progresses. Obviously, only time will tell. But if we do end up setting our weekly high this week, what we're going to be looking for is a higher low to be set in comparison to our previous low here from July 19th at 29,254. And that's because of the magnitude of this move. Clearly, we can see we've bounced a very significant margin here. And so when we come back down, it's very likely we'll form a higher low, because it would be very unlikely to just go all the way from here all the way down to drawdown over 42% to make a lower low on the first go. If we are going to go below 29,000 again, it's going to take us setting a higher low, lower high, and then lower low. So it looks something like this, where we come down, we set a higher low, we bounce, we set a lower high in comparison to the one that we may set this week, and then we come down for a lower low or something, right? It probably not going to look like that crude drawing, but that's just something to kind of illustrate what the point I'm trying to make. So we'll see. But I think there's also a very good chance that we could see higher low being set on the weekly time frame and then a higher high occurring on the weekly time frame as well. So it's going to depend on where that higher low occurs. The further we draw down, the more likely it is that we're not going to get a higher high once we do bounce. So you can imagine it like this. If we draw down only to like right here and then we bounce, it's very likely that on that rise, we're going to pass up this high because we're so close to it. We bounced and we're so close to it. But if, for instance, we draw down all the way down to this blue level again and then we bounce, now we have to go up 33% again to make a higher high, which is less likely than if we were setting the higher low only like 10% away. So that's something to keep in mind, is the magnitude of the drawdown. How big is that drawdown? And then the other trading opportunity on that is the bottom fishing play. So this is where you're looking for a higher low to be set. So you're buying on the lower time frames on where you think that higher low may be set. So that's something that we will be watching for on the weekly time frame in the coming days. If we look at this from a 3-day perspective, we can see that this gray resistance level that I've been talking about is starting to give us some headaches again here. And this is something that I've been talking about has been prevalent for quite some time now. So I've been saying, the first rejection is very likely we got that rejection. And then I said after that, it's likely we'll also get a second rejection. And that's what we're seeing right here, is we're seeing a second rejection. Now this candle closes in 20 hours, so we still have time for this candle to, move back up and close above here, right? But it's unlikely given the resistance that we're running into currently. So this is a resistance level we've only tested once. And it's a pretty strong level considering it's on the 3-day time frame. And this is from our bull trend right here. So we had a low, high, higher low, and then higher high pattern. And those 4 components are what you need to establish a support zone. And then you're looking for the last down candle before that up move where we made a higher high. And so in this case, it's this candle right here. And you can see that when we came back into it here, we bounced. We had a nice bounce all the way up to a new all-time high. We came down into it again, had another bounce right here, and then when pushed through it on the third test, we closed below it. So once we retest that classic support or resistance flip zone criteria, it's going to turn into resistance. So we see that turn into resistance here, and now potentially here again. Now the question, the thing that I'm watching for, okay, no, it's not. The thing that you can also look at here is volume. So I always like to look at volume. You can see over the last 2 days, we're getting declining bull volume on the 3-day time frame. And I believe I've talked about that over the last couple of days. But you can also see that it's lower than these volume bars right here that we had on the initial rise. So this rise is weaker than this rise based on volume. There's less people buying on this rise in price right here than there is on this rise in price based on the bull volume here. So if we start to see increasing bear volume, that's when we are increasing our confidence level that weekly high is being set, and we're going to be coming down to form a higher low somewhere on the weekly time frame. So if we go down to the single day time frame, we can see that the bearish divergence that I talked about yesterday did indeed play out the way that I had anticipated. Whoa, I don't know what happened there. The way that I had anticipated. And we can see very clearly that we're setting lower highs all the way down here. But we're setting higher highs on price. So that's a bearish divergence on the RSI. It means that every time we make a new higher high here, we're losing strength. There's less people buying on each rise in price. So now, once we have this increasing bear volume again, now we need to see how does price react over the coming couple days here. And where do we end up? So if we're looking for support and resistance zones, we can look at this red resistance zone back here from the 14th of May. And this is when we had our bear trend. So the opposite of a bull trend, we're looking for a high, low, lower high right here, which I'll move this out of the way, lower high, signifying weakening bull momentum because we didn't, on this rise in price, we didn't reach as high of a price as we did on the initial high that was set right here. So we see weakening bullish momentum, and then we see a confirmation when we see a lower low. So here's a low right here, and now we go down and we form a lower low all the way down here. And so once you see the candle closes, which is what you're looking for, 2 candle closes below the key low, which is right here, that's when you confirm this as a daily bearish downtrend. And we talked about this back when this was going on back here. So that's in the video archives as well if you'd like to go back and hear me talk about that bull trend, or that bear trend rather, as it was going on. And if we look at this now, we can see we had a rejection off of this already, second rejection off of this now. So the support level is this blue zone, which we already, I talked about right here forming. We had a bounce right here. We had another bounce right here. So now if we come back into this zone a third time, we may still bounce a third time, but every time we hit one of these blue or red resistance or support levels, they're weakening. So every time we test this blue level, it's getting weaker. And every time we test this resistance level, it's getting weaker as well. So we could break out to the upside. We could break out to the downside. So that's something to keep in mind. Another indicator we can look at is the super guppy indicator. And this is where I'm looking to currently bid on some Bitcoin. So this is where these longer term EMAs, these green EMAs, are operating right now. So this is just a collection of exponential moving averages, which are just taking the average of the price for certain periods that you're looking at. So the faster ones, these light blue ones, they move quicker and they more quickly align with the price. You can see that's why they're closer to price. And the reason is because they're taking shorter periods of time. So the way the calculations work out, it's faster. So they move faster. Then they have the slower EMAs, which are these red ones here that slowly grind into being green right here. So for them to be green on this indicator, you need the shorter term EMAs to be above them for a certain period of time. And you can see that here that they were above them, but the other EMAs had not fully rolled over to have all of them be in the most bullish scenario, which is what they had right here. So once they flip to be in that position, which I'm just going to change my settings here because I don't like those arrows on there. I don't really find them valuable. So the green EMAs are where we're really looking for. So really the buy zone for me is anywhere from 45,152 all the way down to about 41.4. Now, the reason why I like this zone is because if we look back at previous times with this indicator, it's not a perfect indicator. No indicator is going to be perfect. And everything on this channel is for educational purposes only, so it doesn't matter anyways what I'm showing you, because it's just for your entertainment and education, folks. So if we look at it right here, you can see once they expand and the faster EMAs are above the slower EMAs, you can see that when we come back into it here, here's a buying opportunity. Boom, we get a nice bounce. Here's another buying opportunity. Boom, we get another bounce. And you ride that trend up, and every time you go into those EMAs, another buying opportunity, another buying opportunity, another buying opportunity, and you keep doing that until you just ride that whole bull wave up. But it works the same way on the downtrend as well. So you see, here's the first test of them. So it breaks down here. Here's the faster EMAs. They turn dark blue when they're bearish, at least for the color settings that I have. And then you have your red EMAs, which is when these are the longer term EMAs that take a longer time to roll over. They turn red. Here's a resistance. We come into it here. Here's an entry. Boom. It rejects massively. Here's another entry. Boom. Rejection. Another entry. Boom. Another rejection. Another entry. Boom. Another rejection. And then eventually they start to contract. So you see how they're wider right here, and then slowly they start to become a little bit closer together right in this period. And then we go through them because we've tested them multiple times now. We have 1, 2, 3, 4 tests of them now. These have not been tested once, and they're expanding. So when we come back into this zone, this is where I'm going to be looking to buy some Bitcoin. So that is that. If we go down to the 12-hour time frame briefly, we can see which I'll talk about this yellow level in a minute, but this gray level is back here from our bear trend. So we have a high, low, lower, high, lower, low, that bear pattern. But then when we come into the level right here, we can take our rectangle, which you can find right here on the sidebar, rectangle, and then you can take your weak magnet and you can snap that to the, I need to have it actually on. You can snap that to the wicks or the bodies of the candle, whichever you prefer. I prefer on the wicks for my support and resistance levels. So you can see that we came into this level here. We had a nice trade that I talked about over the last couple of videos, which played out absolutely perfectly. And then we have this rejection off of that red resistance level that we talked about and off of that daily bearish divergence that we talked about. So now we're coming into this level. We have the we have another bounce here, and it's very likely that we could see a bounce off of this level a second time, which is what I set up here yesterday. I believe that we could easily see a bounce off of this level one more time before we go through it, because it's only been tested once. So that's what we're kind of seeing right now. We're kind of seeing that little bounce, but what we're going to be running into is a fresh 6-hour resistance level that we just printed right here. So if we look at this level right here, we can see why this is a bear trend. It's very easy to see with a high, low, lower, high pattern. So we have a high, we come down, we have a low right here. We come up, we form a lower high, lower than this one. And then we have a breakdown right here where we make a lower low with 2 candle closes below the key low. So now this last up candle before the down move is going to be where we're looking for price to reject off of. So that level goes from about 48.8 all the way up to about 49,719. So that's going to be the area of resistance once we come back up. What I'll be watching for is if we get one of two scenarios to play out here. So we either come into this level and we reject off of it for a new lower low, or we go into this level but we push right through it without even respecting it as resistance. We close 2 candlesticks above it, and then we come back into it and test it as support, kind of like how we did for that 12-hour level. So that is what I'm going to be watching for on Bitcoin. I hope this video was helpful for you. If you like this video, give it a like down below. We really appreciate that. And leave a comment on future content that you would like to see around cryptocurrencies or blockchain technology. And also check out our beginner technical analysis course that we released on Leutheria.com. You can check that out using the link in the description below. You can get 20% off that course. And if you're just getting involved in the cryptocurrency economy, this is a great way for you to learn the basics, learn the fundamental elements of technical analysis, which is what I do on these videos. I'm breaking down the technical analysis, my technical analysis, on Bitcoin's price action to help you guys learn how you can do that better. And this course is specifically curated towards people that are just starting to trade these crypto assets, so you can learn how to analyze things like candlesticks, which we talk about in these videos, trends, which we talked about right here, volume analysis, technical indicators, the bulls versus the bears, and a variety of other topics as well. And then when you watch these videos on our YouTube channel, it'll make a lot more sense for you, and it'll be a lot easier for you to start trading these crypto assets as well. So check that out, and until tomorrow, onward and upward.